Today, I want to explain why the shorts are stuck with no escape, why they can't close out of their positions, and why they're desperate for your shares. I want to explain how they actually ended up in this mess in the first place, and what will happen as a result. So stay tuned, and let's make some money. And now I want to dive straight in with the key information. So, Dave Murphy tweeted saying, let's assume that tokens were used to short AMC. Now, I don't really think there's much assuming to be done, but obviously everything has to be allegedly. He also says they're no longer available and hence the cost to borrow has risen. And he said now as a result, APE is being used as a like-kind security because it is technically from AMC after all. But he says what happens when APE gets converted back into AMC. He says what will the shorts possibly then use to set off their synthetics? It seems like over the last few months we've basically been taking away these shorts' ability to use any kind of replacement for real AMC shares. After the APE conversion and the AMC reverse split where that new QSIP number is issued, the new options chain won't be live until all of these FTDs are closed out. And now these AMC tokenized securities are also gone, they can't use anything for their real locates, which were actually false locates. But so how did they end up in this mess in the first place, and how does it tie back to Ken Griffin? Well, Investor Turf and a number of other sources tweeted saying the US FTX judge has just ordered the names of the two backers of Sam Bankman-Fried's $250 million bail to be made public. It says that they are Andreas, who's a senior research scientist at Stanford, and the other, Larry Cramer. Cramer is the former dean of Standford Law School. Now, the first thing I thought is that these are two very large titles, but I don't even think that these titles or these job roles would earn a high enough salary to post a $250 million bail. As a prime example, one of the deans at Stanford at the School of Medicine earns an annual salary of $2 million per year. The highest paid employee at Stanford is on $5.6 million total. Therefore, if Larry, the former dean, was earning $2 million per year, it'd take him just over 100 years worth of saving to post a $250 million bail. Therefore, if neither of these employees had $250 million hanging around, where exactly did they find the money for that giant bail? Well, if you didn't know, Andreas, the other guy that also posted that bail, is actually connected to Ken Griffin, the CEO of Citadel Securities. It says Andreas was a German-American businessman and philanthropist who was the founder of the Aspen Institute, a non-profit organisation dedicated to fostering and enlightening the people and open-minded dialogue. And it says Ken Griffin, the CEO of Citadel Securities, has been a major supporter of the Aspen Institute and has donated millions of dollars to the organisation. So it wouldn't surprise me if Ken Griffin has slipped a few $100 million directly to Andreas to post that bail for Sam Bankman-Fried. That way, SBF didn't end up in prison having a terrible time, eager to snitch on exactly who he was working with, aka Ken Griffin. And obviously now that these shorts are losing or have lost all of their ways to create fake AMC shares or have lost their ways to use something else as AMC replacements for their real locates, they're now desperate for your real shares. And that's why Fidelity is now willing to pay a fully paid lending request offering 70.25% interest. Also guys, be sure to join me over on Moomoo, the sponsor of today's video. If you sign up using the link in the description below, you can currently get up to 15 free shares. You get entirely commission-free trading, free level 2 market data, and Moomoo is also very easy to use with a very simple and friendly UI. There's also tons of technical indicators and advanced charting tools. This guy received an email from Brian at Fidelity saying, "Dear client, there is currently some securities lending demand in the positions below, and the following lending rates are currently available." Fidelity is basically saying they want your AMC shares and they're willing to pay you 70.25% interest per year. Now, obviously in the past, I've explained why lending out your shares is a bad idea, namely because you can't vote in any upcoming AMC votes if your shares are lent out. And obviously it's also not a good idea because it gives shorts the shares they need to be able to short AMC further. And it just goes to show these shorts are massively desperate for your shares if they're willing to pay you 70% of your position on an annual basis. And as Stickstocks tweeted, he said they don't offer you 70% interest on your AMC shares if your AMC shares are worthless. Clearly AMC shares are not worthless because they're willing to pay 70% of the overall value of the share per year just to borrow them. And as Stickstocks added, he said you're simply a fool if you don't get it by now. And that is why User of Intellect also tweeted saying AMC being on the threshold list and with a 500% plus daily short borrowing fee and sitting at the bottom of a falling wedge, he said, I say that he can safely bet on a huge spike, all other things holding consistent. User of Intellect is saying that yes, history does repeat itself, and perhaps after a multiple bottom and a more stable S&P 500, AMC will be flying. You can obviously see the massive falling wedge we had between 2017 and 2021, obviously where the shorts were shorting AMC very heavily the entire time. We then obviously had the massive 2021 run up and have ever since been in another falling wedge. He's targeting for AMC to have another huge explosion, potentially to new all-time highs, which could kickstart the squeeze. Now, to add even more pain to injury, or to potentially throw something very interesting into the mix, we've seen this tweet from Gary Gensler and some following tweets from Binance. Bloomberg tweeted saying crypto businesses aren't properly safeguarding their customer assets and often mix them with their own funds, according to SEC Chair Gary Gensler. Now, we know this is something that definitely happened with FTX, as FTX was mixing their customer funds with their own funds. But scarily enough, Gold Telegraph has tweeted saying breaking news. The crypto giant Binance just moved $400 million from its US partner to a firm managed by the CEO of Binance. And he asked, who did this remind you of? Obviously, if Binance are doing pretty much the exact same thing as FTX was doing with Alameda, it doesn't set up for a confidence in Binance. I wonder if Binance are now working with the likes of Ken Griffin and Citadel to continue Citadel's manipulation and to keep Binance away from regulation. Or I wonder if Binance is just literally this crazy and is doing the exact same thing as FTX, pretty much the exact same thing that caused FTX to fail. It said that Binance had secret access to a bank account belonging to its purportedly independent US partner and transferred large sums of money from the account to a trading firm managed by the Binance CEO. And as John Reed Stark tweeted, he said on one occasion, Binance only had $100 million in stored collateral to support $1.7 billion in Binance Peg USDC. He said perhaps that's why Binance has no outside auditor, as it's difficult to reconcile a balance sheet with $1.7 billion on one side and $100 million on the other. So it seems that Binance may be doing the exact same thing as FTX, being equally as sketchy, and could end up bankrupt over literally the coming few days or the coming few weeks. So I think it will be really interesting over the next few weeks to see if the shorts have been using Binance to continue manipulating AMC, creating some kind of token that they can use as false locates. And I also think it'd be really, really interesting to see where these guys, Andreas and Larry, got the money to post that $250 million bail. And I also think it will be very interesting to see exactly what happens after the reverse split when the cost to borrow on AMC is still ridiculously high and while AMC is still on the threshold securities list. And again, as User of Intellect tweeted, all of this crazy stuff is all happening while AMC is at the very bottom of this falling wedge, ready to break out and start the next run. Also guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.